Well, hello and welcome. My name is Chris Tanner, and I'm the Director of Education at New Direction Trust Company. And I'm pretty excited about today's webinar. We're going to be talking about precious metals, and our guest, who I'll introduce here in just a little bit, Levi Gunter with One Gold, has a fascinating presentation today, talking a little bit about some economics, things like inflation, and really a nice education on precious metals and how that might fit into somebody's investment portfolio. So I did want to kick off today's webinar with a couple of things, but first of all, we have to share this disclaimer. Our attorneys want to make sure that we let all the listeners know that today the webinar is really just meant to be educational. We're not offering any investment advice, nor are we recommending any specific kind of investment or investment provider. And so if you are making any investment decisions, we would encourage you to, seek out guidance from maybe your CPA, your financial advisor, or somebody that's a trusted individual with those types of decisions. The other thing I did want to mention is that today's webinar is being recorded. And so I know we get that question quite often. So what will happen is tomorrow, you will receive an email, and in that email will be a link to the recorded webinar. And you are more than welcome to go back at any time and listen in case you missed something or you had to drop off or anything like that. And then the other thing I did want to mention is you are muted. So hopefully you can hear me and Levi, but we are not able to hear you. So if you do have a question, if you're on a computer screen, the way that we're going to work the question and answers is on the right-hand side of your computer screen, there's just a button there that says questions, and there's a little triangle next to it. And when you click on that, you can just type in a question. And so what I'll do is I'll read that question out loud so everybody can hear it. And then more likely than not, I'll pass that on to Levi, as I'm guessing most of the questions will be for him. And he'd be happy to answer any questions that you have. So if you do have a question, please type it in now, because if you're like me, the older I get, the faster I forget what my questions are. And what we'll do is we'll save those questions till the end of the webinar, and we'll get them all done kind of towards the end. And so with that being said, I would like to introduce Levi Gunter with One Gold. And welcome, Levi. How are you today?
Hey, I'm doing great, Chris. I'm doing well. How are you?
I'm doing fantastic. So yeah, tell us just a little bit about yourself and One Gold, Levi.
Great. Yeah, thanks again for coordinating this, Chris, and thanks again to your customers and those who are with us today to give us a little time to provide some insight. One Gold, to answer your question, is actually an online platform that allows customers to buy, sell, and redeem gold, silver, and platinum in secure vaults around the globe. So our customers can actually choose storage options here in the US, in Canada, and the United Kingdom, and Switzerland, and can manage these holdings 24/7 through a mobile app or through a desktop. So that's kind of a brief summary of what we provide here at One Gold.
Okay.
The company itself was actually launched in 2018 by our two parent companies. So we have Sprott Inc. and APMEX as well. So if your customers who are with us today, if they've invested in precious metals in the past or have even researched precious metals, it's likely they've heard of one or both of these companies. But just to give a little insight there, Sprott Inc., they're actually an alternative asset manager. They're a publicly traded company based out of Toronto. They've been in business for over 30 years now, primarily known for gold and silver backed ETFs or exchange traded funds. And I believe they're up to around $12 billion in assets at this point. And then on the other hand, you have APMEX, or the American Precious Metals Exchange. They're actually an online physical metals retailer based out of the US. They've also been in business quite some time now, for over 20 years. They're the largest physical metals retailer here in the United States, founded by a gentleman named Scott Thomas. They're also well known within the industry. I believe at this point they're at over $11 billion in sales. So Between the two companies, there's a lot of respect there in the industry. They're both very well known and have over collectively 50 years of experience within the metal space. So, and really, both companies came together and identified a need within the market for a more cost-effective, modern, convenient means of metals ownership. And then that's where One Gold comes into play. And as you said, I'm with One Gold. I've been at the company since 2018, since when we launched the company. And prior to that, I was at APMEX. So I have a fairly thorough understanding of what it means to invest in a precious metals IRA, whether you're doing so through what I would call the more traditional route through a company like APMEX, or whether you're going through a company like One Gold. And I'll talk a good bit about that later on in terms of how those processes may differ, but also hit on a couple other points as well. In particular, I'm going to talk a bit about precious metals demand over the past couple of years and what's really been driving demand and subsequently prices, and also some contributing factors to that demand, not the least of which right now is inflation, right? So we all know what inflation is, whether you've encountered it on some level, whether you're actively managing an account or simply going to the grocery store, fueling up your vehicle. That's to say you've noticed a notable increase in certain goods and services, especially over the course of the past year. And we illustrate that to some extent here with this illustration you're looking at. This is more so showing you an overall decrease in purchasing power for your dollar. As many of you well know, that purchasing power, that dollar is just not going as far as it once did. And in terms of today's inflation, just year over year, we're seeing significant levels of inflation. And I tend to use kind of some commonly traded commodities or core items as a good gauge of that. And just looking year over year at certain items right now, just to quote a few statistics to kind of illustrate that, we're looking at natural gas year over year is up by more than 120%. Crude oil is up closer to 85%. Lumber is up by more than 80%. Coffee is up by over 60%, and sugar is up by over 48%, and wheat is up by just over 32%. So again, significant price increases across the board just to kind of get through your daily lives. And I think there are a variety of contributing factors here, and we could go to that next slide if you want. Historically, there are things that just lend towards inflation. The Federal Reserve has been fairly clear as to their stance on inflation, which is to say they're going to attribute most of today's inflation to a rapidly reopening economy coupled with some supply chain imbalances and disruptions. And they're also going to say that today's inflation is more transitory or even temporary in nature, which personally, I think there is some truth, especially to the first part in terms of those contributors. We do have that rising demand, labor shortages, and economic expansion, but we also have some other factors that I think we have to take into consideration as well. We do have increased stimulus over the course of the past 2 years, massive monetary and liquidity injections into the marketplace, and significant money supply increases. And in fact, just for 2021 so far, we've had more than a 30% increase in into money supply in the US economy, which interestingly enough is an increase that we haven't seen since the early 40s. So you couple all of that with a low interest rate environment, and you get us to kind of where we are now in my mind, which is, you can go to that next slide, which is just a more significant level of inflation, or an acknowledged inflation rate at or above 5%. So this is a level in terms of inflation we haven't seen in quite some time, for actually over 12 years now, since the recession of 08, 09. And oftentimes when inflation numbers get this high or kind of towards the more significant levels, investors tend to adjust their risk appetite accordingly, and they may even begin to favor less risky assets. And this could be a variety of assets. Historically, it's been certain currencies. It could be treasury yields, but it's also historically been precious metals. So again, you see that quite often, maybe not so much in periods of mild inflation, but especially when that inflation number reaches an acknowledged rate of about 5%. Assets such as gold and other safe haven assets start to see some, reinvigoration there in terms of interest. So common misconception there. So gold is definitely seen as an inflation hedge. No doubt, historically that's been the case. But a common misconception is that maybe gold prices trend directly with inflation, which is not the case. Gold prices, you can't rely on them to go up with inflation, especially if we're talking about mild inflation. Just objectively speaking, the data simply does not bear that out. But one thing I find particularly interesting is a statistic here. We're looking from the World Gold Council, which just says that in years post gold standard, gold has averaged a return of more than 14% in years where US inflation was at 5% or greater. So that to me is especially poignant, which says that, just historically, investors tend to run to metals and rely specifically on gold as a hedge against inflation, especially when we kind of reach those more significant periods of inflation. And that's kind of a singular driver of precious metals. So drivers come from a variety of factors. As you know, precious metals demand, the demand for physical product comes from jewelry, industrial need, and even central banks. So I'll quickly go through a few of those kind of factors that affect demand here. The first of which looks like here's precious metals demand by central banks. And what we have kind of displayed is kind of a sum total in tonnage of what central banks have purchased in gold. As we know, central banks buy gold quite often for a variety of reasons, to mitigate risk, hedge against inflation, and against certain currencies they hold over time. We did see a slight dip in 2020 in terms of central bank buying of gold. As you could imagine, with the COVID-19 pandemic and a reallocation of funds there, central bank buying did dip close to 40%, at least according to the CPM group. And we have seen kind of a renewed interest there from central banks to some extent in 2021. They've remained net purchasers of gold, they being central banks, for the last 10 years and are forecasted to maintain that in coming years as well. And something I kind of find interesting before I move on from this slide is the World Gold Council will actually survey central banks, in particular central banks who have purchased precious metals in that year. And in 2020, 78% of their respondents cited, quote, gold's performance in times of crisis, end quote, as a primary reason for purchasing gold. And again, I find that compelling just because, to me personally, that says that oftentimes our central banks are buying metals for some of the same reasons that our individual investors do. But at any rate, this is kind of one contributing factor to overall precious metals demand. You have a variety of other factors as well, one of which including, oh, go ahead.
Levi, I'm just curious. So when the central banks buy, this is just public knowledge, like they don't buy in secret, so to speak. This is, we know what they're buying. Is that fair to say?
That's fair to say, yes.
Okay, I was just curious.
Mm-hmm. Yeah, and one other factor that contributes to physical demand is industrial demand. So when I say industrial demand, mostly I'm talking about silver. Silver, like gold, is known as a precious metal or something that you can invest in, but it also has a wide use in industry as well. In more recent years, you're hearing silver as it pertains to use in electric vehicles and solar panels. And really, as those initiatives, gain steam here in the United States and abroad, we're going to see the demand for increase likely for silver to fulfill those types of projects. So Silver Institute has actually forecasted an 11% rise in physical silver demand for 2020, which would be a 6-year high of just over 1 billion ounces. So again, just one other factor that's kind of driving demand. And we could go to that next slide if you want to, Chris. And just to kind of bring that back home to retail demand. So, central banks buy metals, it's used in industry, but also your individual investors buy metals as well, whether this is for an IRA or a non-retirement account. And in my mind, a good barometer of this is to look at some of your core products year to year and see how they're selling. And if you gauge or if you ask any major metals retailer out there, they're going to tell you that typically US Mint, Gold American Eagles and Silver American Eagles are kind of their #1 performing products in their respective categories. These coins have been produced by the US Mint since 1986. And in fact, the first part of this year, the US Mint reported Gold Eagle sales up by 290% in January of this year, again, compared to 2020. That demand is carried over to other products as well into the second quarter of 2021, with the World Gold Council stat there with bar and coin investment up by 36% year over year. And retail companies such as APMEX and One Gold have been the benefactor to this to some extent, at least in terms of revenue and customer growth. In fact, last year, APMEX saw a record year of sales, over $1.7 billion, I believe, and they're actually on track for a much better 2021 even. And One Gold is seeing similar increases, so not only in terms of revenue, but we're a younger company, so a lot of our increases are also in terms of customer growth. We actually saw at One Gold a 900% increase in customer growth for 2020, and we're seeing that trend once again here in 2021. So again, just an uptick in retail demand starting early in 2020 and continuing strong through this year so far as well. And we can go to that next slide. And just to kind of relate that to your retirement account, so retail demand encompasses, buyers purchasing metal for their retirement accounts, as I said, and non-retirement accounts. But this has been an option for over 20 years now. Since the Taxpayer Relief Act of '97, Congress did kind of expand the types of products that you could actually include in an IRA. So ever since then, customers have had kind of an ever expanding list of dealers and IRA approved products that you could actually select from. So that list has been growing for 20 years. Oddly enough, the process to actually get those metals into your IRA has changed very little over time. And that's what I'm going to kind of talk about next to some extent. So traditionally, I'll just go ahead and outline a few steps that you would need to complete to go ahead and open a precious metals IRA going through what I would call a traditional retailer. The first of which would be you need to select your custodial account. Now, obviously, you could be rolling over funds from an additional, or like rolling over funds from another account or creating a new account. But that is kind of the first step there. After that, you'll need to select your depository, which the depository is that third party that's going to actually hold the physical gold and silver for you. I found that depending on what type of custodian you go through, sometimes this is pre-designated. At other times, it's incumbent upon the investor to select their own depository, and there are kind of a handful of approved depositories out there. This could be a C&T or a Delaware. There are a variety of choices out there, but at any rate, this is that second relationship that you would need to establish after you establish your custodial account. From there, you'll just need to decide on which dealer you're going to use to actually purchase the metal from, whether you already have a dealer that you've used in the past or you have one in mind, or you need to go ahead and do some research and some due diligence and do so and locate a dealer. That's your third step, just before deciding on kind of what products that you'd like to purchase. As many of you know, there's kind of a list of IRA approved products, or rather requirements for IRA approved products. So once you've made those determinations, historically, if you're going kind of this route, you're going to need to then make contact with that dealer. Typically, an order for your IRA precious metals is going to need to be placed over the phone during business hours. So you'll contact your dealer and then place the order, work with your custodian to go ahead and fund that transaction. Once the dealer has funds for your transaction, then you'll need to coordinate shipping from the dealer to your designated depository. And that's it. At that point, you now have precious metals in your IRA. They're held at the depository, and you're simply taking a step back and managing in terms of administrative fees and just kind of watching your portfolio. We have found that actually many times our customers for IRA accounts do tend to hold their metals longer than our customers who are holding metals in non-IRA accounts. But at any rate, once you've crossed that threshold and you decide that you would like to go ahead and liquidate, you would go through a similar process, obviously just in reverse in this case. So you would need to go ahead and contact a dealer. Oftentimes this is the dealer you purchase metals from, or another dealer. Basically, you just need to find someone to buy what you have with you, agree on pricing, and coordinate shipping. So this is typically done over the phone as well. Once you've kind of agreed on the transaction, you'll then work with your chosen custodian to facilitate shipment from the metals and the depository back to the dealer. The dealer will then just verify the metals for kind of the authenticity. So typically that's weight, content, and purity. And once that's complete, the dealer can then issue funds back to your custodial account on your behalf. I have found that this kind of process ranges in how long it may take to execute, mostly in how long it takes the depository to get the metals back to the dealer. On average, you may be looking at around 5 business days there. And then you can go to that next slide if you'd like to.
Yeah, actually, Levi,
Mhm.
a couple of questions. This question comes up quite a bit, and this is in relation to locking in a price and then when you'll actually accept funds. So as you know, sometimes there's a lag between when someone gets an account open and they get it funded, and then that we can actually get funds sent to you, the dealer. So a question a lot of times that we get is, can we lock in pricing? And I know it's dealer specific, but how does that work for you at One Gold? Uh, how far will you lock that price in, or how long will you hold it? What does that look like?
That's a great question because that experience can be fairly unique on One Gold. Technically, you don't actually have to have a cash position to creating an order. So our customers can go in and take a position if they want to preemptively and lock in at the current pricing. So we're regardless of whether the market is open or not, we'll keep that order locked in. Ideally, it's for about 2 to 3 business days. So that gives, in this case, the custodian plenty of time to go ahead and process a wire.
Okay. Yeah, I was just curious because I know sometimes people get a little nervous
Mhm.
uh, and they want to lock in their pricings. They think a big jump might be happening. So good to know on our end. Thank you.
Absolutely. Yep. And so you'll notice some differences here, kind of between that process that I just outlined and then what it may take to open and fund a One Gold IRA. Obviously, that first step is going to be the same. You'll fund your custodial account. Uh, at that point, you actually don't have to contact One Gold. You certainly can. We'd love to hear from you, but you can just go ahead and create your account there on the mobile app or the desktop, as long as you designate that as your IRA from the drop-down options, and then select your custodian there from the profile section as well. Once that's done, oftentimes our customers are simply going to coordinate with the custodian to go ahead and pre-fund the account. So this is another option that we offer as well. Once we've received funds, and this is kind of how it most commonly goes, but as I said, you can preemptively lock in pricing as well. Once One Gold has received funds, the customer now has a cash position in One Gold and can then go in and allocate that cash to a particular product. And that process looks a little bit different again on One Gold because you don't need to really work with a depository ahead of time. You simply need to select the location in which you'd like to have your metals held and the type of metal that you'd like to purchase. For example, if you prefer silver and would like to have it held in Switzerland, you'll simply select Switzerland silver from our buy options there. And once we have received cash, or if you already have cash on hand, the metal is then allocated to your account, and then it's yours. So that's really all you need to do to open and fund a One Gold IRA, and then you can manage your portfolio, watch the value through our portfolio tool on the mobile app. And again, even our One Gold IRA customers do tend to hold on to those metals a bit longer than non-IRA accounts. So once they do cross that threshold, whether that's a price appreciation to a certain level, or you just need to go ahead and sell, our customers can do that 24/7. As I said, even if the markets are closed, and they don't have to contact us to arrange pricing. We have a predetermined premium there for all of our gold, silver, and platinum products, which is a simple 30 basis point or 0.3% deduction from the current bid price. So once you actually execute that sell order, funds are automatically added to their One Gold cash balance. And then at that time, it's up to the customer. So they can reallocate that cash at a later date if they anticipate another price movement of some type, or they can go ahead and just withdraw that cash, in this case, since it's an IRA, back to you, the custodian. And once they place that withdrawal order, we've really refined that process as well. Normally we'll have funds sent on that same or the next business day. So again, those are kind of the high level differences that you're going to see in the two processes. There are simply fewer points of contact and then kind of a shorter transaction time in terms of how long it may take the order to execute.
Yeah, and it's been fun to watch as technology has made everything more efficient, and it just feels like slowly but surely everything's getting a little bit smoother. And so it's really been fun to see what One Gold is doing to just make the process easier for the investor. Because I think it's easier for everyone, for the custodian, the investor, for you. I'm sure all the technology. It's fun to see, right? So we love seeing that on our end. I'll tell you that.
It certainly is fun, and I'll tell you, a lot of us are end users as well, so we want this process to be as painless as possible. His people have been able to, buy gold and silver for thousands of years now, and it just makes sense for it to be as easy as possible to use that in a retirement account. So, yeah, like I said, we're certainly very excited to be able to offer that. And kind of going forward once more, you'll see some differences in terms of the fee structure and the subsequent spread. Obviously, those custodial fees are going to be the same, whether you go through a more traditional retailer or you go through a company like One Gold. I kind of have some average fees here, just in terms of the account opening fee. As many of you know, there's a small account opening fee when you first open your retirement account, an annual administration fee of some type, and oftentimes there's a processing or a transfer fee. Where you'll start to notice some difference between the two is in terms of storage fees. So what I found often is the depository or the custodian may charge an annual flat rate, which I found on average to be around $120. Whereas One Gold will actually charge you a fee specific to the type and amount of metals that you hold. So as you see here on the right side, our gold storage fee is 12 basis points or 0.12% of your gold value. And that's annually, billed quarterly, and for silver it's actually 30 basis points. Silver occupies a good bit more physical space, so there's a little bit of a higher fee there. But just to get kind of an apples to apples comparison there, to achieve $120 annually, you're looking at storing right at $100,000 worth of gold in one of our vaults for a year to get $120. So there are some differences. It's highly dependent on how much metal you hold. Not necessarily a significant difference, but like I said, it's just dependent on the type and amount of metal that you hold. Currently, where you'll see some more significant differences would be in terms of what I would call dealer fees, or simply the premium that you would pay for an individual gold or silver product. And just to kind of qualify this really across the board, as you can imagine, in 2020, premiums have gone up just with a sharp uptick in demand and a slight acquisition cost increase as well. We are seeing higher premiums. Right now for gold, on One Gold, you're paying less than 1%, you're paying 0.8%. And then for silver, you're paying 2%. And that goes for any of our products at any of the locations that we offer. And then I took kind of an average here of your core gold IRA approved products. So right now for gold, you're paying roughly 6% for those items and about 15% there for silver. And just to kind of translate this into your spread, so having paid a lower premium, that's going to lend towards a thinner spread, or the difference between what you buy and what you sell at. So for gold, right now on One Gold, it's approximately $28 an ounce. So in other words, gold would just have to move $28 an ounce upwards before you broke even. And then silver, it's about 80 cents. Whereas if you're going through more of a traditional retailer, those products are a little bit over $100 for your gold items, and then between $6 and $7 for your silver items as well. So that will kind of encapsulate some of the differences, especially in terms of fees and processes there. That kind of covers my portion. I'm sure we'll have some questions there towards the end, but from here, I'll go ahead and hand it back over to you, Chris.
Yeah, and Levi, question came up in regards to fees. The fees that you show, so the 0.8% or 2% on silver, that's on both the buy and the sell side?
Good question. So that's just on the buy side. When you go to sell, it's 0.3%, and that's for any gold, silver, or platinum product.
And does it matter? Because I know sometimes people see differences. So let's say somebody bought metals from another dealer, but then they wanted to sell to you. Does it make a difference to you, like where the the metals were sourced, so to speak, as far as when you'll buy them back?
It does. So basically, if they're selling metals to One Gold, they would have to have purchased metals from us. So these metals are already in our vaults, and we simply assign ownership from metals within those vaults and nothing else, and then they simply sell that same metal back to us.
Yeah, and thanks for that clarification.
Mhm.
Uh, because I know sometimes people have physical possession and it's like, well, who do I sell to?
Sure.
And
Yeah.
so it just totally makes sense. So I have seen some questions coming in, uh, and I just have a few reminders that are specific to using retirement funds. But I just wanted to remind folks that if you do have some questions, feel free to type those in. And I am seeing some questions come in. We're going to have some good ones here, and then we'll get to those in just a bit. So I just wanted to remind everybody, especially if you're new to precious metals investing, and in particular using retirement funds, that the IRS, and Levi mentioned this earlier, has expanded what you can invest in using your retirement fund. So there are currently 4 metals: gold, silver, platinum, and palladium. And really, the IRS just has this fineness requirement. And I think it's fair to say, Levi, that anything that's government minted, uh, these are the standards, correct?
Yes.
Yeah, and so as long as it meets those standards, you can invest in them. And Levi mentioned this earlier, but I did want to just mention that it's important to understand that if you are using retirement funds to invest in precious metals, the IRS does require that there be a depository where the metals are actually stored. And so there are actually 3 players involved. When we're talking about a retirement account, there's the source or the dealer where the metals are going to be coming from. Then there's the IRA custodian, and the IRA custodian is essentially a glorified bookkeeper. So we just track the money and we track the inventory, and that is essentially our job. And then of course, there's got to be a place where the metals are stored. And Levi, just for people that maybe are a little bit unfamiliar with depositories, and I'll tell you, we get a lot of questions when people call us, and unfortunately, we can't give much advice. But if you are new and you are looking for a depository, you've been in the business for a while, what are some of the things that you would tell people to do when choosing a depository?
That's a great question. So really you want to find a well-established name, so a known entity within the industry. And there are a few out there. So that's kind of the first thing I would look for is somebody who's well known and who has processes in place in terms of auditing. You want to ensure that your metals are actually insured as well. And so I should also mention that is when you're buying anything from One Gold, the product is fully insured. So those are some of the kind of bigger points of emphasis. You want to find someone who's well known and that they have well established processes, and then they also have controls such as insurance in place.
Yeah, that makes total sense. So just kind of a quick review. If somebody is interested in utilizing retirement funds, it's a 3-step process. And one, there just needs to be an account created. And then once that account is created, just need to get money into the account. And I would say that most of the people that we work with have an existing retirement plan. So they may have an IRA, maybe they have an old 401k from an employer that they left. And so they're using those funds through a rollover to fund the account. And of course, you can also make a contribution. So once that account is funded, then you can actually go ahead and acquire the asset. In this case, if you're buying precious metals, really it's just a matter of coming to an agreement. And it sounds like, Levi, with your system, they can almost do that through the app or virtually, right? Or does that require a phone call to lock in a buy price?
It really doesn't. Yeah, so largely it's a self-serve platform. As I said, we are available to help. So by all means, if there are questions, you can certainly contact us. But in terms of just opening the account and placing a transaction, it's as simple as, creating your account from the sign up section or downloading the app, designating this as your IRA. You'll have a drop down there that you'll have to complete, and then going in and placing your transaction.
So Levi, if somebody wanted to just kind of investigate, what's a good website? Like, where should they go to get a little bit more information about One Gold?
So they can contact us. I would also suggest going to onegold.com. That's just our homepage there. We answer a lot of questions in our FAQ center, and we have several sections there that address commonly asked questions like that.
Okay, appreciate that. Okay, so we do have some questions that have come in, and so let me scroll back. The first question would, I think, be, and I'm going to toss this also to you, Levi, and I'll answer on the new direction side. But gentleman's asking if we've ever done a webinar on setting up a legacy trust. Uh, Levi, is that anything you've ever approached or done anything or any kind of education on?
We've certainly never done any education on that I'm aware of. I do believe that we have some trust accounts. I'm not really aware of how that works for, if it's any different for a legacy trust, but no, it's nothing that we've have any literature on or anything.
Yeah, and my answer is going to be similar. But what I do like is, thank you for bringing that up, because we are always looking for possible new topics, things that people might be interested in. And so what I'm going to do, I'm the director of education here at New Direction Trust, is that's going to go, that'll be a possible topic. And so I'll just say thank you for bringing that up. And by the way, if you're still listening, whoever asked that, if you wouldn't mind reaching out, we have an email there, the info email, and just in the tagline, say something like Chris Legacy Trust. So that'll do two things for me. One, that'll give me kind of a reminder. And then if you wouldn't mind, hopefully this isn't a big ask, but just kind of give me a sense of what would you like to know? If we were to cover this topic, just give me a basic feel. And I like the idea. So shoot that my way. Okay, so this gentleman's asking, what is the process to exchange one precious metal for another in my IRA? And so I'll ask from your side, Levi, what that looks like if they're doing more like an exchange, and then I'll kind of answer from the custodial side what that looks like as well.
Okay, great. Yeah, I would imagine it looks quite a bit different there. So on One Gold, technically you would go in and basically liquidate that metal that you do have. So technically you would need to go ahead and sell. You can do that just all from your profile there. You'll then have a cash position, and then you could just take that cash and rebuy, your desired metal. So we don't really have a means of direct exchange, given these are portions of physical positions. There's still a sell and rebuy involved.
Yeah, and our process actually would look very similar as well, because you are likely buying something totally different, and the way we do our accounting, it would require exactly what you just said, Levi, is that we would need to see a sell, liquidating the one position, and then a purchase, buying into the next metal. So we wouldn't necessarily have a direct exchange option either, in particular because of the accounting, right? Especially if we're buying a different either type of metal or a different kind, whatever that might happen to be. So, okay, let me take a quick look. Okay, so he was following up with the same question, saying it wasn't clear just one metal for another. So maybe you're doing silver and you want to do gold instead, is kind of what it sounds like. But that process would be the same. If you're changing the type of metal, it would be a sell and then a buy.
Yes, that's correct.
And so, Levi, we have a question, and this is kind of related to spot price. And it's interesting. You look at obviously the demand has gone up, and maybe the spot price doesn't seem to follow the demand. Like when I see the type of demand you're showing, can you give us a feel for what are the factors and the things that go into that spot price that we see when we look that up?
That's a really good question, and especially I think for silver. I think there are those out there who may look at the paper market or the ETF market as something that affects spot price possibly more than it should. So there is kind of a perceived disconnect there. Overall, spot price is supposed to be based off of demand and volume. So that's kind of typically how it should track, albeit, it may not always seem that way.
Yeah. We have another question, and this makes sense in a retirement plan. If somebody wants to take physical possession, and I'll let you kind of answer what that looks like on your side, and then I'll share on our side, as opposed to selling and liquidating the metals, someone certainly has the ability to do what's known as an in-kind distribution. And so if what would that process look like on your side, Levi? So it's in an IRA account, but we're doing a distribution as opposed to, selling it and then taking a cash distribution. What does that look like on your side? What needs to happen?
Sure. So it's a fairly simple process. They would log into their account, navigate to the redeem page, and simply select the product that they would like to have sent to them. Now, this is helpful as our parent company, APMEX, like I said earlier, is a large physical retailer. So at that point, they're actually selecting APMEX coins, bars, and rounds. Technically, there is a sell still involved there because what you're buying initially in terms of the one gold vaulted metal is a portion of like a larger position. So just to kind of give you an example, if you go out and buy 20 ounces of Switzerland gold or US gold, you normally own a portion of a larger 400 ounce gold bar. So really when you're redeeming for physical metal on one gold, you're technically creating a sell for that portion and then using that cash to have physical retail product then delivered to you. So you could actually at that point select specific coins, bars, and rounds. And once you place a redeem order, one gold and APMEX actually will fulfill that. It normally takes about 2 business days.
Okay, I appreciate that. So, and on our side, and we get this question quite a bit, I would rather take physical possession than sell it and take the cash. And we certainly can do that. But what needs to happen on our side is somebody would complete a distribution request. And so you're essentially telling us, how much you're wanting to take out. And to Levi's point, whatever that ends up being, if it's gold buffaloes or whatever it happens to be, we need to know just the quantity, as well as obviously the metal, etc. And then we'll just base the distribution on the spot price that day, whatever it happens to be. And then the shipping and taking care of that's between, really you and Levi or the dealer you're working with. They'll make sure and get that to you safely. But then we will report that to the IRS. And so it works, exactly the same as a cash distribution in terms of the tax implications. So if it is in a tax deferred account, taking physical possession means that there will be a tax. But if you happen to be in like a Roth IRA or a tax-free type account, it's possible there will be no taxes when you take that distribution. But we do still need to report the distribution. We still need to show that those metals came out of the account. And for accounting reasons, it's important that you always let us know that you're doing that or proposing that. So, all right, I'm going to take one more look, Levi, but I believe that looks like all the questions for today. And if for some reason a question comes to mind and we didn't get to it today, I do have some contact information here on this last slide. Feel free to reach out and we're more than happy to answer any questions that you may have. And Levi, thank you so much. That was very educational and informative.
My pleasure. Yeah, happy to do it. And thanks again for coordinating.
Yeah, absolutely. Well, everybody, thank you for attending. Everybody be safe. Have a wonderful rest of your day. And if you did want to look for that replay, the webinar is being recorded. You should receive an email tomorrow with that link. And thank you so much for attending. Take care. And Levi, have a good one.
You as well.
Bye-bye now.